Good evening, everyone. Trader Tim from eminimind.com doing a Monday market analysis video. And as you can see here on my daily ES chart, we are sitting down at lows, which happen to be right down at the negative 23% target from this 2774. That's on the daily chart, the high, the all-time high, down to what was the first major dip on the 29th of October. We bounced, traded to the 61.8, sold off, bounced a second time, and then sold off in a nice little series of retracements. First one sold off, had that hammer, a little bit of a bounce, traded at the 50%, and now we've sold off and we're trading at the target of this daily, which happens to line up with the January low, beginning of February low as well. Now the daily target from this 74 is just below us. If we zoom in a little bit, that January low was a 31. Today we traded down to a 33.50, and then the low, the target of 74 is a 22. So we're all within, 7-8 points here. Um, Tomorrow, it could be interesting in terms of if we sell off, we may get another hammer like this, where we, make a dip below, take out a major swing low, being the January low, but then in the middle of the day, rip back up in that V formation. Now, it's kind of an interesting week the way things fall. We have an FOMC meeting announcement on Wednesday. So typically that means Tuesday is a blah day. And that could be the case tomorrow. We'll have to see. We'll be doing a live trading session as usual on Tuesdays. You can check that out at eminimind.com/VIP. So if tomorrow is dull, I would expect Wednesday to be fairly violent in one direction or another, or perhaps in both directions at times. So expect some fireworks this week. Friday, we've got the expiration as well as GDP before the bell. So there's a lot happening, consumer sentiment after the bell. And so there's a lot of catalysts this week and a lot of announcements that are going to shake things up and make the markets move pretty good. So at least that's my thought process, being down at a target, even if it's in the context of a bearish trend. When you're down at a target like this, it yields a lot of opportunity for some serious movement, either bouncing up to the next 50% retracement short, or breaking through it, taking out the swing low, going beyond the negative 23% target, and then turning around midday and ripping back up and getting that hammer, that V reversal. So that's kind of what I'm seeing going into this week. Now, keep in mind with the expiration on Friday, that means we're in this window where futures rollover occurred last Friday. And so now we've got both contracts, the March, which is the current front month, March of 19, and the December of 18 is expiring. So you have the Z and the H both trading, and this week can be a little bit screwy. Make sure that your charts and your trading ladder are on the same contract, so you don't make any mistakes there. And just, you know, tread lightly. There's no need to overdo it, trying to hit a home run by putting a huge position on 2 minutes before the Fed announcement on Wednesday, and just getting whipsawed all around and having potential for major slippage and things like that. So uh, yes, it's basically the last trading week of the year, but there's no need to break any habits or rules just because it's the last week. So use this time to kind of reflect back on the year, think about 2019, and as we head into the new year, we should really be in for some good trading if this kind of volatility remains, whether it's uptrending, downtrending, or moving sideways. We should have these big ranges should remain at least for uh, first half of 2019, but likely the whole year. So until we have some serious certainty come into the markets, that's when things will settle down. With that, I hope everyone has a great week of trading. I hope to see some of you in the room tomorrow morning, emoneymind.com/VIP, and have a great week. We'll talk to you soon.